Okay, everything, let's clarify the situation. There has been a humming expectation that XRP will achieve a monumental milestone since day one. $10,000 was not only a possibility but also a given and an estimate. That forecast has really picked up steam. Increase, we are discussing none other than Larry Finn of BlackRock endorsing this image, and he's not just talking about a pitiful $10,000 per XRP. Whoa, he's making it sound like a basic must. Before our leap, let's dive right into the core of today's topic. BAS, I need a little help. To join our incredible community, click the like button, subscribe, and ring the notification bell. Imagine heavyweights where it gets juicy. Titans of finance, similar to BlackRock and Vanguard, are now giving XRP serious consideration for their international transactions. Hang on, things will get better. There are murmurs regarding BlackRock releasing an ETF with an XRP focus. Yes, you heard correctly, but there's more. Hold on. Not content to stop there, Larry Fink is now examining the enormous $3 trillion real estate market and speculating about what lies at the core of its future. You guessed it. The XRP ledger is prepared to tokenize everything, and with an astounding 1.2 quadrillion from traders and international swaps through ISDA, the association is configured to go via the XRP. We're more than just Ledger and Ripple. When we talk about $10,000 per XRP, that's what youngsters do. We could be looking at a value explosion of up to $60,000. Let's jump right into the following section. Larry thinks BlackRock just released another explosive. He's not just speaking, he's acting as though Ripple and its digital asset, XRP, are about to do something very significant. Tokenizing every aspect, and in the following, we have a clip that is a component of our video that will draw attention. We won't have to wait much longer because Larry seems to be confirming BlackRock's approach toward an XRP ETF. Here's the clip you've been waiting for. A good way to legitimize it and increase safety is to wait for the release of the Bitcoin ETF. Permit me to state this, are you going to do another ETF? Consider an XRP or an ETF. You have Ether out there, I know that. Consider XRP. Could you respond to that? You don't want me to, and I can't. I perform well. I can't have it all. Give me the wrap, please. I'm grateful. We've seen a swirl of abnormalities in the cryptocurrency world in recent days, especially with this XRP image on the well-known exchange Crypto.com, whose value surged to an astounding $43,000. This is not a one-time occurrence. It fits into a larger pattern of XRP's value unexpectedly rising. Recall how just last week, we talked about a $7,000 XRP problem at a major exchange. Now, it's Crypto.com's time, and it appears that these abrupt increases in XRP's value are starting to happen frequently on several exchanges. However, let's shift our focus entirely to something else, something I learned through extensive research that is equally fascinating and unrelated to BlackRock or the recent surge in the XRP market. We're going to talk about Gary Gensler, the well-known SEC chairman who succeeded Jake Clinton. Most of you probably know that Gensler constantly rates XRP as a security. This is the interesting part. Robert M. Gensler, Gary's brother, is an astonishingly similar brother who is the same age as Gary. Robert holds a crucial role in T-Price as its vice president during this time when you discover that TR Price isn't just any investment firm if you look a bit closer. It is one of the biggest investors, with a significant holding in XRP as well as Bitcoin and Ethereum. Thus, this has an interesting connection. Gary Gensler, the head of the SEC, keeps classifying XRP as a security. His twin brother is a major investor in RP and other cryptocurrencies through a well-known investment firm. It's an exciting position. That brings up a lot of issues regarding the complex forces at work in the realm of cryptocurrency investments and regulations. Which leads us to the intriguing possibility that Vice President of TR Price Robert Gentler has unique knowledge regarding XRP's potential to be comparable to Bitcoin. This argument becomes more popular when you take into account the company's large holdings in these three cryptocurrencies, while the SEC openly denies any insider trading. Several studies and papers have indicated differently. These studies, which center on insider trading and market manipulation, have frequently highlighted dubious SEC operations. It seems that a trend is emerging. SEC officials appear to be informing their family members about which digital assets could soon be freed from the classification as securities. These relatives then make early investments in these assets, and when the asset is formally deemed to be not a security, its value soars, enabling these friends and family members to profit handsomely from buying low and selling high in this situation. Let's examine the probability that Robert and Gentler had inside information about the SEC's possible defeat in a lawsuit against XRP from his brother Gary Gentler. Such information might imply that Congress will push for a settlement between the SEC and Ripple Labs. Savvy investors should take advantage of this excellent opportunity to buy an XRP, but as the price of XRP continues to rise, more and more money flows into Bitcoin, Ethereum, and most crucially, XRP. This adds another dimension to the story of XRP's possible ascent to unprecedented heights. $10,000, $20,000, or even $60,000, especially from analysts like Jack who have been optimistic about XRP. The Ripple forecasts a sharp increase in value, possibly topping $589. Despite being audacious, this forecast highlights the increased interest and conjecture surrounding XRP and its potential in the cryptocurrency space. As Wall Street looks to get a piece of the profitable XRP pie, I have a feeling that an XRP ETF will be the first big move, but let's dig in. Going under the surface of this development, Crypt Basics has revealed some fascinating news. The revelation from an analyst that JP Morgan has made a big move into XRP has caught the interest of a former Ripple director. This revelation definitely made me wonder, and it's something we need to investigate more. The narrative proceeds as follows. An influential person in the crypto sphere reported that Ben Armstrong, who was once connected to the BitBoy crypto brand, had resurfaced certain contentious CLS claims regarding JP Morgan's purported involvement in XRP. This prompted a response from the former Ripple director, Armstrong. He asserts that JP Morgan currently owns a substantial 7.5 million XRP tokens. Armstrong continues by stating that this transaction represented roughly 7.5% of JP Morgan's overall fortune, but to put it in perspective, the math here looks wildly incorrect. Armstrong's figure doesn't quite match up because JP Morgan's total assets are a huge $3.89 trillion as of 2023 estimation. 7.5 million XRP, at its present value of $4.46 million, doesn't even come close to 7.5% of JP Morgan's wealth. Armstrong highlights the importance of JP Morgan's purported approach and their covert XRP hoarding, citing to him, JP Morgan is an up-and-coming force in the cryptocurrency space. So we have the story of Wall Street behemoths like JP Morgan may be entering the cryptocurrency space, particularly with XRP, and even though the figures may not be entirely accurate, the thought that major financial institutions are entering the cryptocurrency space is not to be disregarded. It suggests a broader pattern in which traditional banking and the world of digital currencies are interacting, with XRP at the core of some intriguing developments in Armstrong's. Additionally, bold remarks have brought attention to BlackRock, the titan of asset management. He's heating things by claiming that BlackRock is now considering XRP as a potential investment, having recently had its shares of Bitcoin approved. Portfolio Armstrong continued after it. He is also focusing on the ongoing legal dispute between Ripple and the U.S. Securities and Exchange Commission over the fact that these financial behemoths are entering into. The point is, even though the current legal drama indicates a strong conviction in XRP's bright future, imagine if this accumulation pattern is real. That would mean that major financial institutions are placing bets on XRP despite its turbulent regulatory history. The adoption of cryptocurrency by Wall Street was always inevitable. I've been discussing this for more than 5 years, but but at the time, it seemed like a pipe dream. However, considering where Bitcoin is now and how unlikely it is that XRP would follow suit, I would have to disagree that the question is not if but when respectfully. That being said, the particular situation depicted in Armstrong's picture may not be the complete picture, but, get this, the story becomes more complex in response to Armstrong's shocking assertions. Former Ripple director Matt Hamilton added a healthy dose of skepticism, questioning the authenticity of such a purchase as well as the real impact it would have on XRP considering the token's enormous. Hamilton pulls out the calculator after supply considering that there are 100 billion XRP in circulation. 7.5 million XRP is just 0.0075% of that total. In response to Armstrong's assertions that it's a cheesy homage to the frequently surreal nature of Armstrong's pronouncements, implying you'd practically need a satirical lens to make sense of it all, Hamilton even joked, "I guess this is a parody account." Since the math speaks for itself, let's examine it in more detail. Hamilton was spot on with the numbers, highlighting the blatant errors in the initial assertion. Though it's obvious as day that the numbers don't add up, this made me pause. Where did this bizarre tale even start? Folks, I've done my research and found the treasure. I've located the source, and it's a biggie, so there you have it in the convoluted and frequently unclear realm of cryptocurrency. It's important to maintain your composure when reporting, and as always, I can help. You move across these turbulent waves with the actual details. Please keep in mind that I am not a qualified financial advisor and that the information offered in these videos is only meant to be entertaining. I always suggest viewers do their own research and speak with experts before making any financial choices. Thank you very much for watching. If you found the video entertaining, please click the like button. Also, don't forget to click the subscribe button and enable the alerts to be the first to know when new content is posted. I'm eager to catch up with you in the next video when I release fresh content, so please take care.